to record. All right, so we're going to start these Puke tool series. That's what I'm naming these sessions, picking apart the features, and we are learning about this new one. These triangles, they're either turquoise or pink, and what they show is an extreme difference between many buyers or many sellers. Now, there's a difference between buyers and sellers that you need to distinguish and separate. And with that, I'm going to go to the chalkboard to be able to illustrate some things that are really important. You know or should know that buyers and sellers could be individuals that bought it or are trying to buy it. So it's essentially filled orders or unfilled orders, filled versus unfilled. A lot of what people see, including many of the stuff on the Puke tool, might be filled. You know, we see the rectangles, the blue and pink rectangle, they're filled market orders of greater than or equal to 100 on each side. Those are the rectangles. And they're blue if they're buy orders and they're pink if they're sell orders. And many platforms have that. That's not anything that's too unique. But these are filled orders. They're market orders, but they're filled, which means the buyer shook hands with a seller. There's some importance there, but understand the difference. Triangles are not filled. They're unfilled. Okay? So triangles equal the difference between those that want to buy it and those that want to sell it, but within 3 ticks, plus or minus 3 ticks of the last traded price, roughly. And the reason for that is, think about an example of someone who is selling a house for $500,000. If someone comes in and bids 250, is the realtor even going to make that offer? Of course not. Not serious, are they? So if you bid 20 ticks away from the last traded price, you're not really that serious and you're not really going to have that much influence on the market. But if you're within a few ticks of the last traded price, you're obviously more serious. So remember that. The closer to where the price is, the more serious that buyer or seller is going to be. Plus or minus 3 ticks. Now, it's not just, and it's not calculating orders that are sitting there forever. It's new orders that are getting added or pulled in real time. So it's new information in real time. New information and in real time of orders that are being added or pulled, and then separating or taking the difference between the two. So, for example, if 1,000 new buy orders came in within 3 ticks of the last traded price, and just 300 sell orders came in 3 ticks above the last traded price, that would be a delta of what? 700 plus 700. That would get a triangle that's turquoise. I'm going to keep saying blue, but you know what I mean. So a blue triangle would be plus or minus anything above or below 400 for now. And like I said, triangles are new and we are tinkering with what is a sweet spot. Plus or minus 400. This example is 700, so it would qualify, and there would be a blue triangle on the footprint and the 1-minute charts that I'll show you in a second. If it's greater than 400 or less than minus 400, greater than or equal to plus 400 or less than minus 400. Well, what would make a pink triangle? It would be a minus 400 or greater. So in this example, if we had 1,000 sell orders and only 300 buy orders, would be a minus 700. Why? There's 700 more sellers than buyers, but we have to put a minus or plus to indicate which side. So it's a minus 700. Now, those that are not familiar with the ad puller, the AP, you need to go and watch couple videos. Just put that in the search field on the Edge website, log in and watch that video. When we release that, it's on the second chart for Puke Tool subscribers, but I did a video on it several months ago, and Dave added what the difference is in real time between the buyers that are coming in within 3 ticks of the last traded price and the sellers coming in within 3 ticks of the last traded price. Then he did the math and he flashed a plus or minus number. And we talked a few weeks ago, it would be nice to see this painted on the chart with, as we came up with triangles. And by the way, a minus 400 would actually be a down triangle, but also pink. So we thought, well, wait a second, it'd be interesting to see when these extremes occurred, painted on the chart with these triangles, for number one, to see where it happens, when it happens, but keep some historic perspective to see what kind of subsequent support resistance it would give. So you don't have to remember where it happened and when it happened, but we could see it. And also see rejection, see if the price is doing what it's supposed to do. But if you guys don't understand the difference between filled and unfilled, you have to get there. Filled and unfilled. These and the triangles are unfilled orders at the time we see them. And they're greater imbalances. Do you know the delta imbalance between aggressive buyers and aggressive sellers? That's filled orders. These are unfilled within the first 3 ticks, above price or the offers, or below price in the bids. So around the last traded price, unfilled orders, but they're serious enough to watch because they're close to where the price is, and there's an extreme. What we have been able to conclude is an extreme of plus or minus 400. And when you get an extreme and an imbalance, it goes back to why price moves in the first place. You need an imbalance. I always tell the story when someone said, yeah, that would kind of be helpful. Helpful. It's necessary. Price doesn't go up unless there's more buyers than sellers. It doesn't go down unless there's more sellers than buyers. And not the ones who do it, but the ones who want to do it. The house example, you're probably bored hearing it, but repetition is important. Repetition is imperative, and that is, it's not the person who bought the house. It was more the fact that 3 people wanted to buy the house. 2 of the 3 didn't get filled, but they were very influential in where the price of that house went, right? Unfilled is what these triangles represent. Are they serious? The closer to price, the more serious you are. They're not just laying there, they're coming in and out. Hence, add puller. You really got to watch that video to brush up on what that tool is and what it looks like, and how we've been able to take the numbers and paint them for better use. Why I am sitting here waiting for a second, let me pull up really quick to briefly show people what the add puller was, what it is. I want to just briefly pull this down. Over here, I'll do a little screen share right there. We don't have to get too cute, but actually, let me pause that. Pausing the screen share a second. Let me blow this up. Do that and do this. And resume. Okay. Now you guys see the chart right, correct? Give me a yes if you see it, just to make sure. The add puller is this feature that was added several months ago. And I did videos on it. And what we drilled down into were these numbers here. And then Dave just did the math to make this one the most important number. Plus, if there are more buyers than sellers, minus if there were more sellers than buyers. And when it got high or an extreme, you'd have to see it on here. Now it's painted with these triangles. Pink for sell imbalance, blue for buy imbalance. In the ES of plus or minus 400. So it's imperative in this session, you know the difference between filled and unfilled orders. So you can't just talk buyers and sellers without making that distinction. It's important to know what an extreme might be. Many more buyers than sellers, many more sellers than buyers. And again, where it's happening and how price is reacting to it. Now, another thing Dave did was not only does he paint the triangle, but the number above it or below it is the exact extreme it hit. So you could see inside this top yellow circle, minus 460, there were 460 more sellers who want to sell it than buyers who want to buy it within 3 ticks of the last traded price. Here's this one he lowered to 350. But like I said, we're tweaking our filter number. We started at 500, weren't getting that many, went to 400, and now we're playing with 350. So some of the charts got 400, some got 350. Go back and watch the AP or ad puller. If you put those words in the search field on the website, it should bring up a video that gets into a little bit more depth on this tool, and then took this number and when it got to an extreme, painted it with these triangles. So far, so good. Now, Dave is here. Dave, do you want to fill in any up to this point what I might have missed
You should mention the profile that those things all add up to.
on the other chart? The profile you put on
Yes.
there with it? Okay.
Yeah. Yep. On the page 3.
Very good. Anything else?
No, I think you got it.
Sound like my hairstylist. She says, how's it look? I say, perfect. All right, let's trying to let me see. Pause this a second, squeeze that out. Remove that. Back to the chalkboard. All right. So down triangle, pink is extreme sellers who want to sell it, more than buyers who want to buy it. Blue up triangle, heck of a lot more buyers who want to buy it than sellers who want to sell it. Keep it simple. This is about aha, and it's about the simplicity and connecting the dots. If I had to get into super long explanations of what made a particular mark on a chart, it's probably useless. And that's why these sessions don't have to be go on forever. We want to get more into examples. So let's bring some of those examples from today. This is chart number, we call it number 3. It's the third chart available to Puke subscribers. It's the one that I'm showing in the room every morning. So those in the room, this looks familiar to you. Just to go over it in case you're not familiar with it, this is the ES over here on a 1 minute. This is the NASDAQ on a 1 minute. This is the ES with a footprint of 4 PNF. This is the NASDAQ on a footprint and a PNF of 15, 4 and 15. The reason why we did it this way was to get a better high-low comparison between two markets, the ES and the NASDAQ. So the NASDAQ is on the bottom half of this chart and ES on the top. If you take a magnifying glass to the bars, you would see this. You also could compare and contrast swing highs and lows, like this happened here. This one probably happened there. These lows are those lows, and so on. This made a higher high, and this one didn't. So you guys know, being in our group, how important ancillary markets are. So you want to quickly be able to compare and contrast them with swing highs and swing lows. Either way, we don't have to get into much detail of anything else you see on this chart other than the triangles. We're going to pick apart the features in subsequent sessions, but let's just talk about the triangles. You know how and where they come from. You're going to need a plus or minus 400 in the ES. Let's just stay on the ES for now. And so when and if you get that extreme, you're going to get a pink or blue triangle. Now, Dave was talking about the profile, which he put on this vertical right there. So it's going to stay up there an hour, any time we get a pink or blue triangle, it's going to mark it and kind of show in a profile right there for 60 minutes. You could see a little bit more activity down here in the NASDAQ. And so there's better kind of muscle memory to where and if there's more action and imbalances taking place in a particular area, just like a volume profile would show where the volume is coming out. This triangle profile shows you where aggressive buyers are creeping in. Again, this is not something that people who have a dome would see with orders that have been sitting there for many hours or minutes, because it's all in real time, the ones that are popping in and out when price is becoming and getting closer. It's taking, if you think about it this way, price is moving around. Therefore, what's always changing is what prices are becoming more and less important. Well, first of all, if if last traded price is getting closer to 28, 28s are becoming more and more important, right? Because they're close to getting traded. When they get in our zone of plus or minus 3, Dave Filter does the computations of saying how many offers are being put in and taken out, how many bids are being taken in and put out. Orders that want to get filled, not filled yet. And when there is an extreme of plus or minus 400 in ES, it's marked with a triangle. So let's go over some uses. And I don't want to get bogged down too much in the, what makes it blue. I think I belabored that point. That's where I don't want to get bogged down. I want to talk about uses. And this is in my notes, kind of part 2 of this session. Part 1 is what paints a triangle. I wanted to make sure it was understood the difference between filled and unfilled. I think it did that. And then part 2 is uses. All right. And this is where I wanted to also underscore feedback, not necessarily today, but going forward in the room, on Discord, to me in future sessions, how you're finding them helpful. But keep it simple. Don't look at everything on this chart. Let's just focus on the triangles. So today, and this is a video of this morning in this particular session, the NASDAQ. Let me go over the NASDAQ specs really quick. Right now, the NASDAQ is plus or minus 150. Obviously, it's a thinner market, so plus or minus 150 would be the extreme. More buyers than sellers. Blue triangle, more sellers than buyers. Pink triangle. But 150 is what right now we're saying is an extreme. And that might go up or down whether or not we're too noisy with the amount of triangles that appear. And then the profile of marking it right there in that second yellow circle. So today, what time was this at? Oh, I can't see it because it's off the recorded chart. Hold on a second. There we go. Right here at the bottom, market in context is doing what? Going down. What are people thinking about as a market's breaking like that? People who are short are looking to cover. People who are long are crapping their pants. People who are looking to get long are snooping around. In other words, when it's breaking, people are looking for a bottom. Whether it's a target to cover a short, we got money into it, puke a short, to puke a long, or to get long. Two extremes happen. A pink triangle saying there was an extreme amount of sellers to buyers, but then a blue triangle that said the opposite. Think about the word rejection. That's going to be an important word when using these triangles. So one of the uses is for rejection. Buyer comes in, didn't even get price to go up in the first yellow circle. This one did. The pink one, once we get above it, is beginning to get rejected. Yet all this selling, price didn't care, but it did care about the blue triangle. Now let's take it back in real time to when they appeared, because that's when we're going to see them. All right. Let's just play it and keep your eyes focused in the bottom center here where my cursor is. There's the pink. Does it go down? Yes, only a couple ticks. There's the blue. Does it go up? Yes, couple ticks. Now it's the fight. I don't want to be short if it does that. And I paused it. So a silent balance rejection, similar to the rectangles in market orders that are big that get rejected, similar use. To me, this has been more helpful because more real time, and it's something that many others can't see or don't see or don't have marked. So rejection of it in context, price is already heading lower and people are looking for a bottom. People are for different reasons, and we come firing onto the hole. In order to increase the probability of making accurate predictions, you're going to have to find stuff in real time that puts you in that objective position. $902. I don't know if it was in the ES2 or no, it was just in the NASDAQ. We get a noisy cluster of activity of imbalances. See the profile, blue and pink? A lot of activity, and then you can just see it with plain triangles. And what I'm telling people is you can't be short above these pink triangles, and you can't be long below the noise either. Soon as we get above these pinks, it drives, it goes. And it's a better way to see the same thing. And then we get clearly, let me back it up, try to get this thing right. We get this pink triangle that comes in, a lot of sellers come in, wham, right above it. That's not what price is supposed to do when you get a lot of sellers that come in, which means there's a lot more hidden buyers when they scoop that sell imbalance. Because you do need a lot more sellers than buyers to go down, but that flips and changes all the time. And we got to continue to try like hell to stay on in real time when this happens. It's not doing what it's supposed to do. Now take a look at me circling in real time these two triangles. Let's look at this in the NASDAQ, but on the footprint under a microscope. I also put on uses for a step 3 or a ready aim fire, a fire in the ready aim fire progression. Whether you use the PWAPs, green and red dotted lines, as support or not, people have all different kinds of ways to have their support resistance, but you still got to qualify it. That's the fire and ready aim fire. So let's play it. Just keep your eyes focused in here. You've got the PWAPs, green and red, in this area of the NASDAQ. Wouldn't it be nice to have a better qualifier to know when to participate and open a long and qualify a support area? Watch what happens. One sell imbalance. Oh, it's getting priced to go down. All right. Okay. Not yet. Not yet. Another sell imbalance. Hey, if it gets above here, it's there you go. It's disrespecting, not doing what it's supposed to do. So those sellers very well could have got filled, and now they're wearing it. There's a big enough imbalance to mark it with a triangle, to make it an extreme, and price rip through it. And I'm not saying all of them are going to look like this, but if you're patient, many of them will. You want to buy what you think is going to be the bottom of a retracement. Step 1, step 2, you've got your area of support. Step 3, in this case, sell imbalance gets filled. Market's price didn't care about. that imbalance, and it got rejected. Now, at 9:17 Central in the ES, right in here, this had a little to do with the OPP and bringing that in. There was a potential qualifier coming into support with this blue and another blue. But right at the time, I'm going to play it. Keep your eyes up here. Right at the time, I said, this blue is kind of rejected. This one, if you're going to use these two to be long, be careful because we weren't red in the OPP and then got pretty green. See this number increasing right here? So more longs are coming in, competing with you if you got long. And so right here where my cursor is, I said, be careful of getting long on that. Now, it doesn't go down forever, but enough to shake most people out who might have got long here. And our job is to minimize the heat that we take, to maximize the chance price goes the direction we want it to go ASAP. So you know you got two blue triangles indicating a buy imbalance. Too many longs came in. And we'll build on this with examples of tying in the PWAPs with the triangles, the PWAPs with the triangles, and the OPP to make it still simple, but take all the tools and use them together. Any questions? Bring questions and feedback to future sessions. There's people that are watching this, that are going to watch it and going to use it. You got to document feedback so that this becomes even more valuable. Don't worry about letting go of secrets or anything else. It's only going to enhance your experience and use of it by sharing, because you could share with the whole world and the quote secret ain't going to go away, because this is how markets function. They have to have imbalances, and then when those imbalances get filled back, something changed. It's not doing what it's supposed to do. But you have to know what it's supposed to do and when it's supposed to do it in order to have a better answer on it's not doing what it's supposed to do. Now, Dave changed the filter down to 350 from 400. And when you do that, you're going to get a lot more activity. And we don't want to have too much noise because then they become less important. But we do want to see what maybe a profile of all of these extreme imbalances could show us. So then we kind of went and middled it and said, leave the left-hand 1 minute chart on plus or minus 350 and the footprint plus or minus 400. And when that was done, you could see we had some nice buy imbalances that they got above and stayed above. And then we had this big sell imbalance of 534. Okay. And once it got above it, it was off to the races. It was a qualifier to time a potential breakout more accurately. So we already know how important congestion boxes are. There's one. There's a tighter one in here. And it's like when this red 534 extreme, a lot of sellers, not a lot of buyers, kicks the market down, the market's not afraid of it. They either go away and no longer an imbalance. So the market's like, oh, trying to trick us, huh? And it goes up. Because remember, the extreme imbalance doesn't mean they get filled to go away. They could pull it, hence add puller. And I think this is a very important point. And Dave, correct me if I'm wrong with respect to the functionality. But if it shows minus 434, right? And it has that big imbalance, and then a bunch of people pull it, that imbalance obviously goes away, correct? The triangle isn't.
Correct.
Yeah, the triangle isn't because it achieved at one point it was imbalanced 534. But if those offers get pulled, then that example no longer exists, and that very well could be the reason why price goes up because it's the market saying, we want to sell it. Price goes down a couple ticks. And then they go, no, we don't. So it's not necessarily like rejecting and eating up all those sell orders. They could get pulled. But they did show an extreme imbalance of sellers to buyers. But then they rebalanced. And that's why it's important to see if it does to price what it should do or what it's supposed to, but isn't. If you take a look at 1, 2, 3 now examples of buy imbalances that come in, and again, qualifying when you think there's going to be a breakout, you're better off taking a shot there than here, or, in moments where you just part of the chop. But take a look at these two. These were interesting. If I remember correctly, this first one came in, kicked us up. It rotated and used it as subsequent support. New one came in and kicked us up. This one came in and kicked us up. Now let's watch in real time. Again, confirmation if you're already long. When you see this, watching this imbalance comes in marked by this blue triangle right here, guys. At this particular moment in time, a heck of a lot of buy orders versus sell orders came in. Blue triangle. What's price do? Runs away from it, right? When it sees a lot of buyers, it runs away. They're not filled, they're unfilled. Rallies about 1.5 or 2 points, right? Now it rotates down, and I don't think coincidentally right to where that imbalance showed itself. And it got defended. New imbalances appeared. The imbalance didn't remain, and then when it goes back down there, it shows, oh yeah, this is the imbalance. No, it got out of balance again. If you think of the market as like just a bowl of water splashing around, right? It's changing. All the numbers in the dome are changing, right? And it comes back down, and wham, another blue triangle comes in, kicks price up. Again, what is the blue triangle indicating? That at this particular moment in time, within 3 ticks of the last traded price, there's an imbalance of more people who want to buy it than people who want to sell it. Nothing to do with filled orders, everything to do with how the dome is changing in real time. There isn't any domes that do this. And when people talk about reading order flow, and reading the dome, reading it, it's about taking the important examples, instances, and moments from what all those numbers mean and strip out the noise and show what we construe as big extremes or big enough extremes to paint it to ask better questions. Another blue triangle, which is indicating what? More people within 3 ticks of the last traded price who want to buy it than within 3 ticks of people who want to sell it, using orders to do so, adding and pulling. Think of all the changes that are going on in the dome 3 ticks away from the last traded price. Just think about it for a second. People putting in orders, people getting filled, people pulling orders, putting in, pulling them, changing their mind. Someone new. All the decisions that are going on within 3 ticks of the last traded price. And what we're trying to do and what we are doing is spotting the extreme imbalances of that relationship. In order to get better at predicting where price is going to go, you better know the relationship between 2 people, buyers and sellers, longs and shorts, right? I also put in a note that the triangles are filled orders of bigger trades, 100 or more. Let me write this. We know that triangles, pink or blue, or I'm sorry, rectangles. Triangles are the imbalances of orders around the last traded price. But remember this, the OPP are not orders. OPP are positions that very well could predict where the next flurry of orders are going to come from. A lot of shorts and a lot of buy orders might come in. A lot of longs and maybe a lot of sell orders come in. We're using orders to determine positions, but they're not orders themselves. All the orders that make up the relationship between buyers and sellers are creating triangles when there's an extreme. To me, this here is getting a little too noisy in the NASDAQ, and we would adjust the filter accordingly. But the information that just these set of triangles gave us when trying to read the market by setting up a story and knowing when that imbalance goes away, the market could release. Let me give you guys a finish on this analogy. And this analogy is going to make more sense to the downside. So if a blue triangle comes in, what is that showing us? That's showing us an imbalance greater than 400 of people who want to buy versus people who want to sell within the 3 ticks of the last traded price. Let's say, for example, that's just like your realtor. You're trying to sell your house for $500,000, and your realtor says, hey, got great news. Great news. 3 people are putting in offers today, putting in bids. Let's keep the language the same. And you, as the seller of the house, say, great, I'm going to sell this thing for 520. You tell your wife, forget about 500, dear, 520. One of the bidders goes 495. The other bidder goes, you don't even have to counter, 498. The other one goes 505. The other one goes 510. And you say, we're waiting to 520, dear. Okay. There's an imbalance of buyers and sellers, right? People want to buy it. People want to sell it. No transaction has taken place. You haven't sold it. They haven't bought it. So 3 of them, you're expecting a higher price, right? Price kind of goes up a little bit, right? 495, 498, 502. See, honey, I told you it's going up. Well, we're waiting. And all of a sudden, the realtor calls you up and says, hey, Johnny, they all pulled it. What do you mean they all pulled it? None of them want to buy it anymore. Well, we'll tell them we'll do the 505s. No, they're not there. Well, how about the guy at 498? He was the first one. Nope. You don't want to do it either. Do you see how that would play out as a rejection in relationship to an ES chart? There was no transactions in the story I just told you, but it was order flow, wasn't it? And that is, strong indication of why price doesn't do what it should do when you see this imbalance. But then other times that imbalance, those people are real and they are going to run the price up to 520. But if they all pull it and there's no imbalance, you see price going down, back down through it, that would be why. The profile, someone's asking me to repeat the profile, is just marking where on the chart the area that the triangles came in. He lowered Dave lowered it to 350 plus or minus 350. So the lower the number, the more triangles and instances we're going to get. And so it builds out the profile. Blue are all the buy imbalances that would have come in and where they came in, and the pink are all the sell imbalances or triangles. And so he is just keeping a better historic perspective with a profile of what the most popular price or area it is you're seeing these imbalances. Does that make sense, Kyle? Good question. The value of the profiles, we are learning about that all together. I think that you'll find more value out of triangle profiles, OPP profiles, than straight volume profile if you're a profiler. But for now, I'm focused on just the real-time fire and ready and fire progression, out of breakouts, rejection when the imbalances come, and maybe go bye-bye. Dave, anything you want to add I missed?
No, I think you're good. Good job.
Thank you. we're going to talk about different features in the upcoming sessions and tying it together, but then also some new information and examples we found from the usefulness of these triangles and a better sweet spot of 350, 400, 450. They're going to change it every day. Kind of have the best of both worlds. Kind of a smaller number on the left-hand chart, bigger number on the right, so we can kind of calibrate the frequency. You don't want too many, you don't want too few, but you have to know what they mean. And then you have to know how and why price moves in the first place, or you're really behind the chance of being able to do this consistently. So don't get caught up in the noise or how many things are on the chart. Just one simple thing at a time. Take a look at, now this is a recording, but this minus 410 downside. In fact, I'm in real time, go back to show it. If you're long and you see it get below there, it might trigger you to get out. Or if you see a lot of longs come in and the imbalance, or above there could trigger you to get back in or get long. I mean, this is where David lowered this one to 350. That's why you see the frequency go up and the amount of triangles also go up. And so if you guys could picture your gnome and now understand that pulling what numbers are important, but more importantly, when we get close to when it really matters, the inflections, the changes, and then the true relationship between the buyers and sellers without having to worry about something too far away from the last traded price or something that's not real time. Like people that want to play when it's time to play, those are the ones we're able to watch a lot more efficiently and effectively. And so make sure that you're studying these. You have a good baseline and maybe more with respect to where they come from and some out of the box uses, fire and a ready aim fire to qualify support resistance, rejection. I also didn't mention future targets or support resistance, right? Areas and a price that now in real time we could determine in the near future are going to be important. You're going to see subsequent support resistance back up to these triangles. And then another thing I had in my notes, watch for reactions. You know when to now pay attention. Think about without this particular tool at this particular moment, you're looking around, looking at your chart and looking at something else, and all of a sudden, boom, a triangle comes. It focuses you on a price at a better time. So you can indeed watch watch for a reaction. Asking better questions like, did the market's price do what it was supposed to? But you don't know when to ask that question if you don't have the right information in real time. Make sense? Any other questions before I exit stage left?